Alrighty, this is the Utopia trading signal strategy. I used this for when I was sending out signals about a year ago. Okay, there's a lot of rules to this, but I'm going to try to cover the bases to make you understand exactly how this works. So, this is the bar chart platform website. And this is how I did a lot of my back testing before I started live testing it, and then eventually selling it as a system, as a trading signal system. Let's see, the things that you don't need: Bollinger Bands. I found out that wasn't necessary. I just kept them on there just because. You don't need the simple moving average 35, TMA 20. You don't need those. Let's see, yes, all you need right here is the simple moving average 50, which is going to be in blue. Simple moving average 20, exponential moving average 13, and the simple moving average 200. So this actually works on Google, ExxonMobil, McDonald's, Coke, Nike, Intel, Baidu, and it somewhat works on Apple, but you probably shouldn't use it on Apple because the system is slightly different for Apple. So I would have to teach you like a altered strategy, plus it doesn't work as well in general. But yeah, when I was doing this strategy, it was working about 80% of the time, a little bit over, and then it started dwindling at certain points, going to about 75, 72, 70%. But this strategy isn't really designed to be as highly efficient, high probability as the other trading strategies that I've been showing you, because this is designed to be very, very, very simple. Just fire away, enter a trade, call it the end of the day. Make your trade at 11 o'clock every day if the signal is strong for you and you like the way it looks and everything. And then come back at the end of the day and see if it was successful. This is only for stocks, and it's only for these stocks. But basically what you're going to do, you're going to pay mostly attention to the EMA 13, the SMA 200. The SMA 20 matters, but not as much. But yeah, you want to make sure that the price doesn't cross the SMA 20, and if it does, you have to basically, SMA 20 isn't really important because generally if the price crosses the SMA 20, it probably crosses the EMA 13 as well. But basically what you want to do is, this is 10 o'clock right here and this is 11, so coming into 11 o'clock you want to look after 10:10 and see if the price touches any of these moving averages: the EMA 13, SMA 20, SMA 50, or the SMA 200. If it does, after that, then whenever the price is at 11 o'clock, whatever the price is then, if it's above the SMA 50, then you want to do a put for the end of the day. This is on the 5-minute chart. People think it's kind of crazy to do this strategy on a 5-minute chart, considering it's 11 a.m. going into 4 p.m. But it works, or it was working really well. I'm not sure about the consistency now. It's been a while since I've really used this strategy. But yeah, at 11 o'clock the price is above the SMA 50, so you do a put because the price touched these moving averages after 10:10 in the morning. If it didn't touch these moving averages after 10:10 in the morning, I'll show you an example of that, then it would be a call. Now, the SMA 200 right here is the brown one, and as you can see, after 10:10, the SMA 200 was penetrated and price closed above it. So on anything except for McDonald's, this would be a call because the price touched the SMA 200 and finished above it at 11 o'clock. But for McDonald's, you ignore that fact and you do a put. That's only for McDonald's. So Try another one here. This is also for McDonald's. This is what I was saying right here, but this is another exception. Like, okay, let's see. If this SMA 200 wasn't crossing the other moving averages going into 11 o'clock like it is, then this right here, since the price didn't touch any of these moving averages, I call it a chaser, because the moving averages are chasing the price but not quite touching them all the way until 11 o'clock and after 10 in the morning. So this would be a put, except for the fact that the SMA 200 is crossing the different moving averages, and I call that a lingering SMA 200. So it's lingering above and crossing these lines, so because it's lingering, I do a call. So do a call, end of the day, it's up. So the exception to the rule. I'm using samples that have exceptions so I can give you a better grasp of it as quickly as possible. Alright, this one's going to be for ExxonMobil. Let's see. Okay. This one, with the SMA 200, if the price touches pretty much any time, as long as it's not right at 9:30 or like the first 10 minutes of the open, if the price touches, after that, then whatever the price is, if it closes above the SMA 200, then you want to do a call. So right here, see the price is right here at 11 a.m. You do a call, and it's a successful trade. These are the exceptions. Like, I'm showing you the more difficult versions of the of this setup, of this trading strategy. Normally, it's going to be really simple. The price is either going to be above or below the SMA 100. The price will most likely have crossed the EMA 13 or the SMA 20 or something, SMA 50, sometime before 11 o'clock, between 10 in the morning and 11 o'clock in the morning. And then you can just say, okay, call or put based on whether the price is above or below the SMA 50. But these are the exceptions, so I want to make sure you understand these, because they're important to know. This is a simple one right here. You don't see the SMA 200. You don't want to go around looking and seeing, oh, the SMA 200 is way up here or whatever. If it's lingering, if it's close by, and especially if it's crossing these lines in an immediate vicinity, then you want to use the rule. But right here, the price is just chasing. You have an 11 o'clock close right here. You wait until 11 o'clock, it closes. You input the trade immediately once the price closes at 11 o'clock for an end of the day trade. So you do a put right here. What's this price? About 74.95 or something like that. So you do a put right here because the price is being chased by the moving averages and doesn't quite touch, and that's a successful trade. This is on McDonald's. And I'll show you one more. ExxonMobil. Okay, this is what I mean. The price is lingering right here. First of all, the price is lingering. Secondly, the price doesn't quite touch the EMA 13 at all, so it's basically a chaser right here. So right here you do a call. But this one is sketchy. You probably shouldn't do this trade at all, because the price right here, okay, the SMA 200 is sort of lingering, but at the same time it's not crossing these moving averages, so it's a chaser. So you do a call, but the SMA 200 is really close by, so you have to be wary that the price might try to deviate back to it. Basically, the strategy is all about the mean deviation, so you have to basically time the market based on mean deviation. So that was when I came up with this strategy. I was trying to figure out how often the price deviates back to the mean and how it arranges in the way it goes about doing that for these particular stocks. And the ultimate solution was what I came up with as far as the lingering and the crossing of the different moving averages and the way they go up and down based on that. And then I can time the market based on that. And sometimes the price will be above or below, but it'll close at 4 p.m. in the money based on this strategy. But this strategy is going to be a lower probability than your other strategies that I'm going to show you, but it's also by far the more simple and just look for the price to go there at 11 o'clock, enter the trade, get out, go do something else, and then come back and see if it's successful. So you don't really have to think that much. Once you understand the strategy, you don't have to really think about anything. Just at 11 o'clock, either enter the trade or you don't. But you kind of want to be careful. You don't necessarily want to do this strategy every single day. And if you do, you kind of want to look at every single one of these stocks and find the one that is the most suitable for you. Because I used to send out about there's at least 4 signals a day, but up to 7 signals a day. But you only had to, you could take however many you wanted to. But that is the Utopia trading strategy. Hopefully you understand that. If you have any questions, just shoot me an email.